We stand at a crucial juncture, not only for Namibia, but for the global financial ecosystem. The call to action is urgent, and the choices we make today will shape generations to come. It is vital to look ahead, not behind, lest we let the shadows of our past obscure our vision for what can be accomplished. The past provides us with valuable lessons, but it must serve as a launch pad for progress and not as a barrier of our aspirations. Indeed, the future is already here, actively informing our present. Technology is transforming how we live, work, and transact, and its implications for the Namibian economy and financial system are profound. The rise of e-commerce and digital platforms has blurred geographic boundaries, seamlessly connecting businesses and consumers across regions and promoting a spirit of global interconnectivity. By the end of 2024, cash in circulation in Namibia stood at 5.5 billion Namibian dollars, juxtaposed with an astounding 2.7 trillion Namibian dollars transacted through digital payments. This is not merely a trend, it is a revolution. At its core, the purpose of finance is to empower individuals and businesses. It enables savings, investment, borrowing, and risk management, thereby ensuring financial security and promoting economic growth. When harnessed effectively, innovation in finance cultivates an ecosystem where competition flourishes, job opportunities expand, and quality of life improves. Moreover, innovation in financial technology, or Fintech, holds immense promise for enhancing financial inclusion. It can provide accessible, affordable, relevant, and secure financial services to the most vulnerable members of our society, ensuring that no one, regardless of their geography or background, is left behind in our journey toward progress. The future of money and payments is digital. Fintech and financial innovation are no longer optional luxuries. They are inevitable realities that are already happening. Whether Namibia chooses to lead or follow, whether we are early adopters or laggards, will determine how much prosperity we harvest or how many opportunities we miss. If the future of finance is indeed digital, then the challenge before us at the Bank of Namibia is clear: to support a digital economy that enables innovation and promotes competition while ensuring monetary and financial stability. When we talk about stability and innovation at times, particularly in the short term, are not good friends. But in the long term, they need each other. Stability creates trust, and innovation cannot sustainably exist without that trust. So over the long term, they need each other. So as a central bank, we are responsible for stability, but we need innovation to progress as a nation. Today, technology and finance are converging at an unprecedented pace. Fintech companies are both competing with and collaborating with traditional banks, and public policy must provide direction. Digital innovation always begins with an idea, and disruptive ideas have become the hallmark of modern finance. You see new fintech startups, large digital platforms offering payment and credit services, and the rapid growth of crypto assets, stablecoins, and AI-driven finance. These forces are challenging traditional intermediaries such as banks, insurers, asset managers. Yet, digital innovation can both complement and enhance the traditional financial system. There are certain technological breakthroughs that will define the next era of finance. If you ask me what will dominate over the next 2 to 3 years, I would like to believe the following will dominate in finance. You'll see quite a lot of stable coins. You'll see a lot of tokenized assets. You'll see CBDCs, and you'll see fast payment systems. But let me try and get into each one of these. Let me start with something that we don't pay much attention of in Namibia, that's stable coins. Stable coins are cryptocurrencies designed to maintain stable value, typically pegged to reserve assets such as the US dollar or gold. For example, the USD back, called the USDC, allows digital value to move seamlessly across the internet. Today, stable coins in circulation are estimated at around 300 billion US dollars, billion with a B. That's more than the combined size of Visa and MasterCard. So and it's estimated that over the next 5 years, stable coins will probably be a 4 trillion US dollar business. So it's a massive opportunity for fintech companies in the fintech space as far as the stable coins are concerned. However, at this stage, stable coins fall short of providing elasticity in the monetary system because more than 98% of them are tied to the US dollar by value, raising concerns about monetary sovereignty in many jurisdictions. Then you have got tokenized assets, the process of representing real-world assets such as securities, commodities, or real estate. And that's becoming quite big. When you get tokenized shares, you get tokenized money market funds, tokenized fixed income funds that you are getting. So most of the asset managers are using portfolio construction very innovatively nowadays in terms of their use of tokenized assets. And what is actually helping all the stable coins and tokenized assets is regulation, particularly in the US. US accounts for about 2/3 of the global capital markets. So they have passed something called the Genius Act to regulate crypto, stable coins, tokenized assets. So it's something that's legal in the US. And that's why you see a lot of development in the US around stable coins and tokenized assets. Then the next one is central bank digital currencies. That's state-backed digital money that combines the trust of central banks with the efficiency of modern technology. Namibia's own exploration of a retail CBDC and collaboration with the IMF underscores our commitment to prepare for this future with prudence and purpose. I see quite a lot of opportunity for wholesale CBDCs in Namibia. Once you have got a fast payment system or an instant payment system, to a large extent, you cater for the retail need that CBDCs are fulfilling. But for wholesale CBDCs, there's going to be a great opportunity for fintechs. Then the next big wave is fast payment systems. Those are real-time payment networks such as UPI in India, Pix in Brazil, PromptPay in Thailand, and SendPay in Costa Rica. They have revolutionized financial inclusion and commerce. These systems demonstrate how low-cost, interoperable payment infrastructure can become powerful enablers of innovation, expanding access and accelerating economic participation. Together, these innovations will be the game changers of the next 2 to 3 years, reshaping how value is created, how value is transferred, and how value is stored. To prepare for and lead in this new era of digital finance, we must act with vision and purpose. I propose 3 strategic enablers that will define our readiness for this future. First, modernizing our legal and regulatory environment to create the right conditions for innovation to flourish. Stability and innovation, as I said, are not friends in the short term, but they need each other over the long term. If we want to drive innovation in the country, we need to be from a regulatory perspective, to be very light. We need to be very smart. Otherwise, you're going to stifle, you will kill regulation. So my message to my colleagues at the Bank of Namibia is smart regulation. That's not deregulation. Simplification of regulations to assist innovation in the country. Second, investing in digital public infrastructure to ensure that every Namibian can access, trust, and participate in the digital economy. And third, empowering entrepreneurship and innovation, giving rise to solutions born from local ingenuity. Modernizing our legal and regulatory environment. What are our thoughts around that? Our financial system can only be as innovative as the environment that enables it. To this end, the Bank of Namibia is advancing a holistic enabling environment, one that combines smart regulation, institutional agility, and technological capability. Through our Fintech framework and regulatory sandbox, we have introduced greater flexibility for onboarding Fintechs into the formal financial system, fostering responsible innovation while safeguarding financial stability.